You wake up thinking your savings are safe in the bank, but there is a hidden force quietly eroding your future. Over the past year, the actual purchasing power of your money has likely dropped significantly, even if the numbers look the same. This isn't the work of a hacker or a common thief. No one broke into your account to take this wealth away. You feel it every time you visit the grocery store, fill up your car, or see a notice of a rent increase. This is inflation, a giant, invisible machine funneling wealth from ordinary savers directly into the hands of asset owners. Think of it this way: $100 used to fill a whole basket. Today, it barely covers half of what you need. It's as if the ruler you use to measure value is physically shrinking while the world around you stays the same size. When central banks print massive amounts of new currency, the value of every existing dollar is diluted, like a stadium flooded with too many tickets. When there is too much money chasing too few goods, the value drops for everyone. Most people worry about income tax, but inflation is the silent tax that you never actually sign for, while your salary might remain flat. The rising curve of living costs creates a widening gap that eats your lifestyle. You work just as hard as before, but a shadowy economic force is quietly draining the jar of your hard-earned wealth. In this environment, holding cash is a losing game. As the currency devalues, your liquid savings literally turn to dust. Retirees on fixed income suffer the most. Their monthly checks stay the same while the price of survival climbs higher. The middle class finds itself squeezed between stagnant wages and the relentless pressure of rising daily expenses. However, inflation doesn't destroy wealth, it transfers it. Corporate owners and real estate magnates often see their values soar. Large debtors also benefit. They borrow valuable money today and pay it back years later with much cheaper currency. Governments, being the world's biggest debtors, use inflation to effectively shrink the massive weight of their national obligations. This is why the wealthy prioritize productive assets like factories, businesses, and farmland that generate real value regardless of the currency, while idle cash remains frozen. A productive asset is a living entity that grows and yields more cash flow over time. Don't let the psychology of a small raise fool you. At the cost of your life is rising even faster. Time is the enemy of the saver, but the friend of the investor over decades. The difference is staggering. Understanding this game is the first step toward financial freedom and protecting your hard-earned legacy. Start focusing on assets that inflation cannot touch. Be the one who owns the game, not the one being played. Wealth isn't what you earn, it is what inflation can't take away. Subscribe to Wealth Horizon to master your future.